Gonna throw this open to a Q&A shortly. I'm gonna kind of get us started here with these gentlemen, and we had sort of some thematic questions prepared in advance, but I'm a reporter and I've just heard some information and my questions are better. So I'm going to throw that out and start with some of my own. But we've just, as Hugh was just pointing out, I mean, this is a situation when we get into these trade negotiations. It's a give and take. We're going to have to give something to get something, and these are markets that we want access to. And frankly, if we're not part of these deals, somebody else gets better access than we do. So the question I want to start with all these gentlemen is, in TPP in particular, but in agreements in general, in these negotiations, what should we be willing to give, and what should we be trying to get? And have we been giving enough, or have we been giving too little? And obviously the TPP and the 3.25% market access in dairy raises that question right away, is, are we getting enough in return, or are we holding back too much at this point in some areas and not getting access to the things that we do well at? And I don't know who wants to start, but maybe we'll start with Al, because I see him nodding his head here.
Oh,
are you still turned on?
I don't know, am I still turned on?
Why don't you take this one?
Okay, no, I'm turned on.
Okay.
Yeah, so good question. I guess my sense of that is maybe a pragmatic one. Countries have sensitivities over particular issues for good or not so good reasons. Our interest in TPP was to protect, to the extent that we could, our dairy and poultry industries. And I'm still looking for the poison pill in the 3.25% access, because it just seems too good to be true, because from my perspective, we got terrific access to the Japanese market. And the one thing that I think, if I understood this correctly, that everything was going to turn on was the access that Japan gave to rice to the US. And as far as I know, that has never been made public. But it was thought that would set the tone for everything else. And I guess what I would infer based on that is that Japan mustn't have given much access to the US on rice, because we didn't give much on dairy. But we got a lot on red meat, we got a lot on grains and oilseeds, and those were our core interests. So I don't think I'm particularly concerned about that.
Well, and I just want to say, often just to, as we probably all know, but just to clarify, just, when we're only giving a small amount in dairy, it doesn't mean that we're only getting a small amount in that sector. If there's somewhere that we're also not getting something that we wanted back, it's going to be somewhere else. There's going to be some other trade-off. And when you're talking about 12 nations, it's not even necessarily our trade-off, as you pointed out. It's, how much access are Americans getting, or how much access is Japan getting to the U.S. market in rice, and then it starts to sort of, there's a domino effect where, well, okay, so American farmers aren't going to give as much, but maybe I'll throw it over to Ludovic. I mean, are we asking for the right things, and are we getting the right things? Because that's something you raised earlier.
I think the problem is that when you come to the negotiation table, to this agreement, you don't have negotiation power, actually. No country has. What you said, which is interesting, is that Canada is a maker and not a taker. I mean, it's important that you show that you're a trade nation, but let's be honest, at the negotiation table, what really matters, and which should be much more the issue to me, is preparing for these FTAs. After Ricardo, there were tons of other very famous theories that were developed. One that I like particularly is one on heterogeneity of firms. And if you look at, there is a very famous paper by Grassman and Helpman in 1993 that says, for a foreign trade agreement to be successful, you need to have a balanced structure of exporters in both countries taking part in the FTA. And actually, the paper actually also says that a good FTA is socially harmful. Because if it's socially harmful, that means it's actually benefiting to the surplus of the firm. Very interestingly, I think you can negotiate as much as you want, but there is usually little room. I mean, the food is actually very specific. If you look at the ASEAN, food is out, the tariffs are still high. You know, the food in the WTO, the reason why the WTO rounds have actually failed is because of food. So dairy and food is very particular. Don't touch my rice, don't touch my wheat. You know, people don't want to touch with this. So, but they're very, very liberal on car equipment, on chemicals, on all of that, you know. And that's, I think, the food sector will be one of the reasons why TTIP, the transatlantic one, will take longer. Because nobody, the French want to export their foie gras, and the US, their GMO. Nobody wants either of that, unfortunately. I like foie gras. I don't necessarily like GMO corn, but that's another issue. Or Monsanto seeds, for the matter. So my point is, it's not necessarily how much you can negotiate. It's because you don't negotiate much. There is a price. I mean, if you look at any FTA in the world, there is actually, you can say before, ex ante, how much the room to negotiation will be. The bigger concern for me is pedagogical issues. You know, you don't explain to people what this FTA means because the risk lies in execution. You know, access for SMEs, not for the big ones. Financing, which is a big concern, export financing, supply chain financing, risk management, credit practices, you know, the commercial justice in the countries where you export, how do you recover international debt collection? All of that is never really explained. So that's one part. And the other side is, how do you prepare your country to be equipped for this FTA? And again, one of the things that I said in the beginning, which you know is really important today, is that we are in a world where there is no pricing effect. If you exporting is not about volumes of export, exporting is about importing innovation. The more diversified your trade routes, the more you will learn about the markets, the more you will import innovation in the way you design your products, you assemble them, etc. And today, there is no return on investment because the pricing is so low that I think, you know, again, TTIP, you know, is great. I agree with you, but it will be peanuts in value terms in the short run in terms of impact because the pricing is so low today that there would not be a significant change. I think it will be good maybe to open routes with some of these countries, but that won't change really the game yet, no? And that's why for me the negotiation when you arrive at the table, it's really it's exogenous, right? You have a pricing environment today, very low pricing. You have a export structure and export apparatus with companies, and you arrive to the table like that, and you want to have the first mover advantage, I get that, but beware of how you prepared to basically, because you won't negotiate much. It's not as if, you know, you can come at the table and by economic diplomacy, you will, you know, halve the tariff on, I don't know, on textile or something. That doesn't work this way. I mean, I've been on these rounds when I was at the Ministry of Finance in France. You know, it's really nice. Everybody's very respectful. Everybody talks a lot. Everybody has their own lobby pushing for this or that. But in the end, you can ex ante calculate how much will be the effort that will be made on both parties. So the real work, the real thing that matters, is what you do before you engage in this country, in these FTAs.
Well, and I guess some of that preparation, though, and if you're going to prepare your market in advance, I guess the question becomes: do you actually start to erode your negotiating position? I mean, let's say that we were showing flexibility on dairy supply management in advance. You know, would sort of, you know, preparing ourselves for the inevitable on that essentially mean that something we had on the table to negotiate with gets taken off? Maybe I'll throw that to Hugh. I mean, you know, you talked a lot about sort of, you know, being part of the process and making sure that your interests were in the negotiation rather than just having to take what somebody else had done. So I guess, I mean, should we be sort of positioning ourselves for the inevitable on some of this stuff in order to be there, or do we need to kind of go to the table holding on to as much as we can so we actually have something to trade?
Well, you know, it's interesting to look at the history of the TPP because, of course, it was U.S. driven. So you asked the question, did we get the right things? We have to look at the context of our relationship with the United States and the United States' relationship with these other partners. Basically, you know, you all recall back in the late 80s, Canada and the U.S. did a trade agreement. And finally, after 100 years, Canada decided it was better to get inside the tent than to be outside the tent, and we had preferential access to the U.S. market. Then along came Mexico. We had to be part of NAFTA in order to stay part of that, and now along has come the TPP. And there's no question that some of the preferential access that we had under NAFTA is going to be broadened and widened. Why? Because the jackpot, the thing that everybody is aiming for, is access to the US market. That is the driver of this process. So the TPP was embarked before Canada got on board. Canada, frankly, was asleep at the switch. The US came into it, Australia, the others were into it, and it was Canada, Mexico, and Japan that were the latecomers. And so finally, I think Canada woke up, or the government woke up, to realize that if we're not part of this, the rules are going to be made anyway, and we're not going to be there, and the preferences that we have are going to be eroded, and we're going to get nothing for it, so we better clamber on board. And it was at that time, of course, that New Zealand and others said, yeah, but what about supply management? Are you prepared to put that on the table? Well, of course, everything is on the table. Whether it stays on the table or not is another question. That's, David, interesting coming back to your point. So because we took such a hard line, it actually gave us a fair amount of coinage to negotiate with. If we hadn't had a supply management system, and you already heard me, I don't think it's a good idea, and I think it's unfortunate in a way the TPP didn't make us do some of the right things towards reforming this. But at the time, it was actually quite handy to make others pay a fairly high price for us giving up relatively little. What we didn't get are some things in the U.S. market. We probably could have got a better deal on procurement. You know, even though the U.S. and everybody talks a great game about liberalization, they all have their sacred sectors. For the U.S., primarily, it's sugar. It's interesting how it's practically always a dairy sector. And frankly, we will have to wait and see how this goes down in the U.S. I saw Hillary Clinton's just come out against it. And, you know, she was Obama's Secretary of State. So, you know, maybe at the end of the day, the whole thing will fall over. I certainly hope not. But what we clearly got was at least equivalency with our competitors in the Japanese market. That was something that we really needed, and we certainly seem to have got that in both manufacturing, potentially in services, I don't know, and in the export sectors, agricultural sectors that Al talked about.
One thing that you know, you just said services, I don't know, and I think this is extremely important also that we highlight the comparative advantage that Canada has in the services. I mean, unfortunately, when we talk about exports, we talk about balance of goods. Yes. We rarely talk about balance of services, but let me tell you, CETA, so the Canadian and EU trade partnership, it's all about access to procurement and government services. It's a market that is 2.3 trillion, you know, and so I think it's something that we shouldn't underestimate, which is, you know, how you equip, you know, when I said equipping the country, it's also about equipping human capital and the global structure of the nation, you know, the diasporas in Canada, and the fact that there is, you know, there is bilingualism in some areas of the countries, for example, to access procurement services of the French country, you know, where French, you know, the public expenditures are very important, so it's a big market. Out of the 2.3 trillion in the EU, I guess we have half a trillion just for us of, you know, government services that need to be supplied. So I think we, you know, behind this TPP and this last generation of trade agreement, services are playing a most important role than they used to before. Before it was really about goods. And so in TPP, for example, I thought that it was extremely light on services. I thought the investment part, the ISDS, so how you can protect your investment, you know, abroad, and I think this is strong in TPP, and this is important for countries like, you know, Vietnam, or countries like Brunei even, or even Singapore. But for me, the thing that we really need to have a look at is services, banks, insurance, real estate, but also services linked to goods.
Digital,
you know,
services.
Digital services.
Some things on digital services.
And that's, you know, in agri-food, for example, we underestimate how much we have to equip, you know, the containers on captors for the food to be transported. This type of technology and this type of tracking services, for example, are extremely important and very good for pricing, because it's usually linked to a patent, to intellectual property. So usually if you roll it out, you know, it's very important. So why not imagine this also, that Canada could, you know, equip Singapore hub, you know, export hub in terms of services of handling the ports, you know, the technology, the digitalization of it. And I think this is also very important, not to, because in the numbers you don't measure it the same way, because but it's also very important opportunity in all all these trade agreements to be on the service side.
But you know, the global value chain that I pointed out, services and goods are embedded. They're interwoven. You know, it starts out with potentially a service with an intellectual property service. With you have marketing services, you have goods supplied, you have everything is interwoven. So you really can't disaggregate anymore. It's all one continuous flow, and that's what these agreements have to do. They have to remove those choke points, and that you have to address services, you have to address investment, and of course the traditional barriers to the movement of goods.
Well, I think that kind of gets us into somewhere else I wanted to go, which really is what is the next frontier. I won't say the last frontier in trade, because there's obviously more than one, but we used to always talk about, before the Doha round, we were definitely talking about agriculture as the next hurdle we wanted to clear globally. It now appears, and you guys might not agree with me or not, but it appears to me like that just isn't going to happen.
The rounds, you mean?
Sorry.
The rounds?
I don't mean specifically Doha, but I mean in general.
No, the
in general, trade liberalization in agriculture
WTO is dead.
Limited.
WTO is dead.
Yeah.
I mean, the World Trade Organization is useless. If you see the mushrooming of the FTAs and the bilateral agreements, it means that the WTO is dead. TPP is not WTO kosher. I'm sorry, but it's a regional trade agreement. So by definition, that means that you have tariffs to the rest of the world. So this is not, what the WTO has been about. And so I think when you said the next frontier is that maybe TPP or TTIP will actually have this contamination effect, and whatever standards are designed within these mega trade agreements could actually become the norm. In other words, countries, and you will see the results, the success in one way, if countries actually want to join these agreements, if countries beg to join these agreements, that's how you will see that these agreements have succeeded, that they become the norm instead of becoming the exception. But the WTO is dead. I mean, they haven't, because the dogma was so strong, they haven't managed to be agile enough to embark with more countries. And so focusing on these rounds with zero tariffs, and of course this was made to fail. And one thing that you mentioned something before. You said trade has tripled and GDP has quadrupled, or is that the other way around?
Trade's increased tenfold,
tenfold,
four times.
And 4 times, yeah. But the thing that was not on your graph, which is the reason behind that, is capital flows. Money is moving. Why do you think the BRICS are hitting a wall right now? It's because money is repatriating to the other side of the world. So for me, the next frontier, if I may, is capital openness. And we live in a world where actually, if you look, there is a very famous paper by Isho, which shows the capital openness. We are stagnating on the capital openness in the world today. We put capital controls in Greece. Algeria doesn't allow you to repatriate dividends. Brazil has capital controls, as many as you want. So the next frontier is that, okay, you come with goods. Now you come with a bit of investment, but actually, how open is your balance of payment? How open, are your money flow between countries? So that goes for TPP, for example. A lot of people saying, "Oh, currency manipulation." It's not there is no such thing as currency manipulation. There is a world where basically some of these countries, like Vietnam, capital outflow was massive. So the currency depreciated because the flow of cash left the country, not because they wanted to depreciate. So the biggest issue right now is either convergence, because you will not have capital openness to the max, capital flow openness. But how much convergence can we get so that trade financing, trade value is secured? And we focus too much on volume, which is an industrial revolution heritage. Today, the problem is really value and innovation. And for that to work, you need capital to flow, not only goods and people.
So instead of, sorry, go ahead.
Yeah, no, I think interesting points here. I think one item I disagree with you on a little bit with respect to WTO. From my understanding of it, there will be a completion of the Doha round. It will be modest, because it's as much as a face-saving measure as anything. But the one thing, going back to agriculture as being kind of the stick in the mud, usually the choke point among everything else, is all countries have agreed that export subsidies are evil. And if we can get a Doha agreement on that issue alone, that makes actually a tremendous difference.
Yeah, but Al, do you think the US will ever give up on the Farm Bill? I mean, let's be very honest on that.
Well, I mean,
They will never. I mean, it's impossible.
there's some that it'll be very difficult for them, for sure. You
No,
bet.
but very. I mean, I like the euphemism.
But there's
yeah.
there's some sense that the U.S. doesn't abide by trade agreements anyway. Actually, they do. They comply with these things. I mean, they're really dragging it out in this country of origin labeling thing on us very badly, but in the end, they will comply. But if we could get export subsidies for farm products off the table, it would change EU agricultural policy. It would dramatically change U.S. agricultural policy. That is going to be the issue for the Canadian dairy industry, and they're very aware of it.
But you see,
Subsidized exports are a huge issue for us. And there is actually, I haven't been able to pull it out and make any sense of it yet, but there is a line that I read somewhere in the myriad of things that came out on Monday and Tuesday on subsidized exports among TPP members. And I don't know how to interpret that yet, because it almost, that could be the poison bill. It almost looks like you can't have subsidized exports among TPP members, and that would basically lock our dairy exports, what we have of them, out of TPP member countries.
That's very important because, I give you an example of in France. I don't know if you follow the news. It's a small country, I'm sorry. But it's
not as small as this.
Common agricultural policy, in Europe is starting to be deregulated. So there are some subsidies that are disappearing. One of them was on meat and dairy, actually.
Yeah, quotas on dairy.
Exactly. The biggest impact it had was, and it's France, okay, everybody was in the streets. They came with the tractors to Paris. They fucking blocked excuse my French, they blocked the city for like 3 days. And what did the government have to do? They had to promise to them €1 billion every year in disguised subsidies for this guy, because the balance sheet of these companies is, they had to disappear a long time ago if I were Darwinian in my way, But they stayed because they had the subsidies, and now it's like checking into rehab, They had subsidies for a long time, now they have to live without rehab. It doesn't look good, It's ugly when you check into rehab. And basically these people, these companies, they now have these disguised subsidies by the government. So now the EU is going to come to us and say, this is, unfair competition. And we're going to say, no, it's not, because it's something else. And I think in TPP, you also have that. If I look at Southeast Asia, which was very open, they're starting to become very protectionistic. The Indonesias of the world, even Vietnam, etc., they're very worried about losing the opportunity to develop. I mean, Vietnam is a good example, because like Canada, it's an ag commodity, country, They have ag commodity, and they had a credit bubble. They don't have the middle, they had textile, but basically looking at China, and this industry is declining because now China is actually delocalizing again in Bangladesh. So Vietnam has a problem. They need to give jobs to their people. So they need to develop the manufacturing base. How do you do that? You start actually forcing the processing of your own rice so that it is exported in a way that is already created jobs in your country. And I think a lot of these countries, and that's why on export subsidies, to go back to your point, I think a lot of the countries are now showing exactly the opposite. When I was at the World Bank, we call that Development 2.0. Countries like Ethiopia or Rwanda actually give the middle finger to the World Bank and the IMF and said, we are not liberalizing our ag sector. We actually will subsidize it. They will call it smart subsidies, whatever, because we think this is the only way we can have an agricultural revolution. So the problem with export subsidies is that I think as big countries are ready now to withdraw a little bit the policies, including India, that was the big announcement of the last round, the smaller countries, and especially in Africa and Southeast Asia, I think they actually want to make sure that they use subsidies in their phase of development to create jobs and have kind of a social check and balances. So I'm very worried about the ag sector, because again it's very political. It's something that is extremely important for people, and that the import substitution theory is still very, very strong. So each time they see, when you had the commodity crisis in 2007, especially on ag sector, the price of rice went up to 500%. And the reason was because everybody started putting export ban. The Philippines made a humongous bid on the market for imports of rice that was not actually fluid at the time. So each time there will be little nudges like this. For food, people will continue to use good old methods of protectionism, including under umbrellas of free trade agreements. I think that this is not immune to going back and forth on some of these subsidies and protectionism measures.
So I'm just, before we throw it open to questions from the floor, I'm just going to ask one more because that kind of leads me into sort of one of our big points today, was that are we seeing, and this lack of growth that we've seen in global trade volumes over the last basically since in the post-crisis era, is this reflective of what Ludovic was just talking about, this trend towards protectionism? Is this something, especially coming from the emerging markets, the developing markets, that's going to be a major problem in international trade going forward? Or are we in, are these growing pains after a very difficult period? And maybe I'll throw it to Hugh to start on this one.
Well, I think the kinds of agreements that we're talking about, the TPP being a good example, is precisely a response to these kinds of issues. I mean, all kinds of different barriers have grown up as the ability to protect industries through tariffs has declined. Human ingenuity has known no bounds, really, in terms of producing all kinds of other barriers. And I think these agreements will try and tackle and work on those. I mean, there's no question that the growth of some of the BRICS and their stage of development, I think, has been a factor. I would disagree with you. I don't think ASEAN has been a very open economy. In fact, I think that's been one of their big problems, even amongst themselves. They have all kinds of barriers. They need to they need to move beyond that to be able to be more open. China is a very, very good example of a country that's taken on certain disciplines and no sooner taken them on than finding other ways to erect barriers. I mean, it'd be very interesting to see what happens after the TPP. The TPP will have a diversionary effect on trade on China. So what is China going to do? What are some of the other countries around the TPP? Korea, Taiwan, the Philippines, and others. Will they, in fact, try and climb aboard this train and adopt the rules? That's the premise on which it's been negotiated. So it will be, in fact, a rule setter. Or will they drift into some other orbit of China's and perhaps have less ambition and fall back into more protectionist ways? I guess we'll just have to wait and see.
Can I say, sorry, one thing on China, counterattacking some way, because I think Philippines and stuff, they will just join at one point. But there is a very important thing that is happening 1 year from now, almost, which is China will be getting market economy status. I don't know if you guys are familiar with that, but when you basically join WTO, 10 years after that, you are entitled to become a market economy status economy. What does this mean? This means that basically other countries cannot enforce tariffs on your exporting to them. In other words, today, if you're a German company and you're importing Chinese goods, you can calculate a tariff and you can impose a tariff on the Chinese exporters to you based on the fact that China is not a market economy and that you use basically the price of other countries as benchmark, and you do a little calculation to say, I'm going to put 5%, I'm going to put 10% on solar panels, on machinery, agricultural machinery, etc.
For dumping, you should explain, it's for dumping, right?
Well, everything is for dumping.
Yeah.
You know, TPP is about dumping.
I mean, these are temporary retaliatory tariffs.
Of course, yeah. I mean, it's basically protecting yourself, and the country is not considered as a market functioning country. December 11th, 2016 will be the day that China will be automatically granted market economy status, unless some members don't want it to happen, but it's actually almost bound to happen. That means that China will export even more deflation to the world, because whatever they are producing will be flowing to the rest of the countries at a lower price, because the countries will not be able to put tariffs, or they will be against the WTO rules. So you know, for example, trying to source through TPP in factory countries that used to look at China, or countries that were against China in the trade development, such as Japan, you know, China has a natural defense mechanism, which is they're getting this market economy status. They're developing what they call One Belt, One Road, which is a massive investment in trade that is, hundreds of billions of dollars of additional investment in trade. And, I think we shouldn't underestimate again, and to finish off on that, the fact that TPP is one agreement, but TTIP is another one. And I think TTIP is much bigger. It's not, I think, actually, it's twice bigger, and twice as big in terms of value of the market, in terms of patents, in terms of investment flow. It's 3 times as big as TPP. So the idea will be to see how these two conflict a little bit. And Canada will be certainly the poster child for making them work, because you have already signed CETA and you have TPP. So the idea is actually, how do you look? Do you look westbound or do you look eastbound? And certainly you can use a little bit of both. So that's what makes you in a very favorable position today, which is maybe to use a little bit the knowing and the consuming of the other side. But there is no clear answer on that. And again, the balance sheet will be up for control and scrutiny over the next years. Right?
Yeah, I think the situation that you raise is maybe a little bit troubling. I hope it's an interim measure, bump in the road. But we have recently Ludovic made reference to EU major subsidies announced for dairy industry in Europe, as well as the swine industry, and this is happening as milk production is increasing, and in fact the EU countries to which subsidies are the greatest have the greatest increases in supply. So some people are just sitting back saying, like, something's not working right here. We have new studies that suggest that the U.S. will be offside of its crop subsidies in this coming year. Another piece on wheat subsidies in China and Southeast Asian countries. We really hope this is a bump in the road, but if it's not, it's troubling, and it sort of says, where are we at on trade disciplines in agriculture and food, and probably more generally, as we get more innovative in terms of how we do subsidies and protection of one form or another, probably extends into a lot of other sectors of the economy as well.
Okay, well, thanks, guys. I'm going to throw this open to questions on the floor. I'll go a little Phil Donahue on you here. I think I just dated myself severely. I'll walk around the room here with the microphone. So if you got a question, just actually, I don't need to go Phil Donahue. We got a microphone here. So. Okay, so
is this working? Yeah,
you're good. So anybody got a question? Just hands, and we'll try to get around to you.
I'll try to focus on one side of the room at a time.
I could do the other side. I could do Phil Donahue.
A lot of points were touched upon on these trade agreements, but how good are the trade agreements in function of the currency? We're as good as the currency, what it is now in Canada, for our trade, regardless of what the agreements might be, whatever. So to what extent are we subject to all this working as long as our currency stays where it is or weakens further?
You guys want to answer?
Well, I'll maybe give a short answer, and then I'll turn it over to a macroeconomist. The challenge with currency is, at the end of the day, it's domestic policy. It is domestic policy. So, if we were inclined to do so, we can make structural shifts in the Canadian dollar, and nobody's going to tell us that we can't do that because it's domestic policy. And I worry, as Ludovic mentioned, what is currency manipulation? Well, it's countries exercising their own domestic policies to adjust their currencies as they believe is in their best interest. So we're vulnerable to that, and I'm not sure there's really much we can do to mitigate it. But over to the macro.
I mean, for me, I think I agree with what you said, but for me, the biggest concern today is the fact that Canada is actually affecting full-fledged by whatever will happen with the US and the Fed, no? Meaning that the depreciation of the Canadian dollar to the US dollar is basically because 75% of the export go to the US and 50% of the exports are commodity-based. So that means your real effective exchange rate is entirely linked to what will happen in the US and especially the Fed. So I do think that in the short run, the Canadian dollar will continue to trade at 1.3 or something, maybe slightly up. But so you will be in a prolonged period of time with lower commodity prices and the Fed eventually hiking, or the Canadian dollar will be low. That gives you not the immediate benefit to have a cheaper import bill from the TPP country, or, meaning, in other words, there is less of an incentive to delocalize some of these jobs, because basically you're still very cheap to produce today. The wage bill is not very expensive in Canada. But it also means you have a unique moment to capture the export competitiveness angle of this agreement, meaning this is the window of opportunity to cut the middleman. That's what your currency situation gives you today. And I really do think that, you know, I'm happy to see that there are all these opportunities in the agri-food and food processing, but I hope that there are many of them, because being in this deflationary environment in Canada, being a little bit in the eye of the storm, I think there is an opportunity to export more, and then hopefully to price it up as your currency will be going up eventually, because it's underpriced today, and as innovation will be going up. So there should be a positive cycle once you've tied the trade routes with some of these countries. Conversely, other countries are now faced with massive currency depreciation on the back of lesser Chinese imports and the risk of the Fed hike, because the dollar is becoming less available and more expensive, and the exports of these countries to China are declining. Think about the Japans of the world, etc. So their currency is depreciating passively, and some of them are deciding to depreciate it even more, like Japan. So the idea is that there is a spiral here where a lot of the countries that signed today are a bit hinging towards cheaper currency. So the US becomes really the very strong company when it comes to the currency, and therefore, you know, the investments from the US should be more important than the rest. As you said, they're not interested in trade. Consumption in the US is 85% of GDP. This is unheard of. You know, long-term average is 70, 72%. It's 85 today. So the US role today in the TPP can only be investment, no trade. So Canada could become, it's true, the hub for re-exporting to these countries because the Canadian dollar is cheaper. So I think the currency situation today is positive for you when it comes to trade, not necessarily when it comes to investment, but still you have a little bit of comparative advantage. But this currency situation can reverse very quickly. You know, if there is a problem in the Strait of Hormuz, if the Fed loses credibility, there could be a reversal of the slight competitiveness you have today. So the moves need to be iterated, and that's why I'm very interested in what will be the outcome of the elections, because I think it will change a lot. The policy, the domestic policy angle will be very important to decide what Canada can enjoy and do with the current situation on the global currency situation. And we'll see. I mean, this is up for decision, I guess. But there is a unique opportunity today. This may not be the case in 18 months from now.
I just add one point, that the low Canadian dollar clearly is helping our export sector, but our productivity is still low. I mean, we basically are hiding behind the devaluation of the Canadian dollar. That's not going to last forever. Obviously, there's going to be cycles. And what we really need to do is focus on productivity and innovation so that when the dollar is no longer trading at 75 cents and it goes back up into the mid-90s, we're better equipped to compete, which has been part of our problem.
Yeah, and there's substitutes. Make no mistake. Productivity and a weak dollar are substitutes, except when it goes back up and you're left with the crummy productivity. Yeah.
Okay, anybody on this side of the floor?
There was one question.
Go back that way.
Thank you very much, and a delightful presentation, gentlemen. Et merci d'être venu nous voir. Hein? Ça fait plaisir.
Merci.
Because everybody's bilingual in Toronto, you know.
Of course.
I'm still waiting to find out what the French say for "excuse my French."
It's merde alors.
Merde.
It was mentioned earlier in terms of preparation for the CETA, and I'm sure the same will apply for the TPP. The Chamber of Chambers, the UCAN here, which is one of my few or many distractions, has a project to have two people from Europe do a visit Canada, do a cross visit of Canada, and they will be reporting to UCAN. And I'm sure Canada will be doing the same. I have not heard of a project yet in Europe to kind of sensitize businesses and get them prepared to think of how to, now we have this wonderful plane, let's get some licenses to fly them, right? So that's something to concentrate on both sides, bilaterally. So that's one question if I can ask you, and now I have also a second question while I have the floor, which is probably a very naive question. What is the end game of a naysayer like our wonderful NDP friends who are doing the bantering as to why the TPP should not have any reason of being? So that's the second one, and it may be two different groups that will answer that. Thank you.
Sure, I'll maybe start. I think perhaps you're making the same point that I was trying to make, which is it's one thing to get the access, then how do you line up the combination of key private sector investments, policy direction, public resources to really make it work? You know, so just to pick one issue, which we know is an issue both with CETA and I expect with TPP, although we don't have the detail yet, which will be low-level presence of GM products and other contaminants in grains. The Europeans have a particular set of standards. We have a bulk handling system for grains across Western Canada, which if it's offside with those standards, then we could have all the access in the world. We're not going to deliver on any of it. So there'll be no increased earnings, no increased trade, nothing. So, you know, the point is, and your analogy to a plane is a very good one, you know. How is this really going to work? What public resources? How do you get everybody on board? We're going to have a public debate federally in order to get this passed, but the deal will have to be sold. To some extent, the CETA deal was sold, but in a majority government, it doesn't have to be sold that hard. This one probably will have to be sold harder and better. But that can be a very productive exercise because people will come to understand, hopefully, that you need all hands on deck to really get the value out of these things. Hugh?
Well, I just pick up on the point about the door is now open, how you convince people to walk through that door. For example, there's a lot of talk about SMEs, right? SMEs should, I think only 10% of SMEs export, and of those, most export to the United States. It's very easy to tell an SME they should be thinking about exporting to Korea because of this bilateral trade agreement, or should be exporting to Japan. It's another thing to actually provide them the means to do it. I think there's a huge scope for exporter education. Dwayne McMullen, my former colleague, we both served at the embassy in Korea many years ago, was here from Foreign Affairs Department. You people are all in a sense, part of the export industry. EDC has a role. Local development authorities, I know the Board of Trade here has taken on some initiatives. First of all, to publicize the agreement so people actually are aware that's in there, but then secondly, to provide various means and seminars and so forth to enable people to know what services they can access, whether it's the Trade Commissioner service, export financing, export insurance, and so on. But just to come back quickly to the whole SME thing, I think it's unrealistic to expect a lot of SMEs to be exporting to Asia. What we need to do is help those SMEs to do business with the larger companies in Canada that are exporting. That way, through this value chain that I talked about, the suppliers to Bombardier, for example, will be exporting to Asia, but they won't be doing so directly. They'll be selling to the supplier in Montreal or wherever it happens to be. And we need to help that happen throughout the economy.
Maybe one word on this, on the SME, but you know, it's not only about the public sector. I mean, you mentioned EDC, and you mentioned, I think it's really about the business services. You know, I mean, you need to have a balancing, you need to have an evening out of the toolkits between the countries that are engaging. So today, for example, Canada has a comparative advantage and Canadian SMEs have a comparative advantage because some of them have access to more business services than big companies in Vietnam or in Brunei or even in Singapore. So I think about credit insurance, export financing, political risk insurance, bonding, You know, I talked yesterday. I arrived at the hotel and I saw there was a wind conference, wind industry conference, and they told me that the surety, the bonding market in Canada is peanuts. That is actually not as big as it should be when you look at the U.S. surety market, or even in Europe, you know, Germany, etc. So the idea is really, how do you give access to the toolkit to the majority of companies? And I agree with you, it's not good to push all the companies to exports, because often they get a huge non-payment, and then that could actually put them belly up, you know. But to also you know, I'm in TTIP, for example, I know that it would be a massive opportunity for SMEs, and because I think for European SMEs in particular, or medium companies, I think that would be the opportunity to access the North American markets. I think it should be considered the same. The question is really, how do you have a pass-through of first the information, but most importantly of the tools, so that everybody can try out basically to tie their own trade routes, because otherwise the margins will be very low and the benefits will be even lower, because it will be spread through the supply chain. So I think sensitization missions are very important. I think all the institutions are very important. Often they are very conflicting. There is an ecosystem of institutions, and nobody really has at heart to help the execution of the export, of the shipment, etc. Because everybody is monoproduct a little bit in this world. There is substantial efforts that can be done still here in Canada to structure the export community. That's for sure.
And Will and Al answer the NDP one.
Yeah, we didn't answer your question about the NDP. I assume this is intended to draw disaffected auto workers, perhaps, but I think they were going to get those votes anyway, maybe. So I don't know. I'm not enough of a political...
It'll be interested to see what happens in British Columbia, which is strong NDP territory. The Council of Forest Industries has just endorsed the TPP.
Yes.
It's very good for the West Coast. How you square that circle, saying, well, it's the old issue. What do you say it's one part of the country? How does it echo in another part of the country?
Well, and maybe Mr. Mulcair's fortunes in the polls are indicative of how this is working. I don't know.
So you see, they didn't want to answer the political question, but then when you got them started, that was good. You know, I'm French, so I cannot comment on Canadian politics. It's too complicated for us. You know, we just have the socialists.
Well, and I just had a column that I think is in today's paper. I haven't read it yet. Basically, my argument is that Mr. Mulcair is arguing, is debating a point that was already lost 20 years ago in this country. So you can only debate it so strongly. It was a great conversation, debate, whatever we want to call it. I'm afraid we're out of time, and it flew by. So I want to thank all three of these gentlemen for all of their input, for the people in the audience who threw out some questions, and for those of you who probably have a whole lot more, but apparently we got jobs to do today, so we got to get back to them. But again, thanks for everybody, and thanks for having us here.
Thank you.
Great, thanks again for everybody coming. I get a sense that we're trying to sort of wrap this up, so I'll be very brief. First of all, thanks on behalf of the association. Hello? Again, we have forms out, sign-up sheets outside for repo credits for the brokers. I want to present and thank the speakers and moderator today. We have made a donation to Alzheimer's Society of Canada, which is what we typically do every year. David, I'll get you to stand up here and look over there. Thank you for your time. Thanks very much. Ludovic. Hugh.
Thank you.
And Al. So with that, we've concluded. Thanks again. Great turnout, and I thought this was a great session, and appreciate everybody's questions and attention. And again, thanks very much, and go Jays, go.